This video was supposed to be sponsored, but I determined that their product was complete garbage and so I canceled at the last minute. Instead, I'll just announce that I have a Patreon and a Discord and that'll have to cut it. I love you all. Please give a chuckle. Taking your first step into options trading can be both intimidating and stressful, but fortunately, we can use some familiar principles to make this dive much easier. I want you to think back to when you first started talking to girls. Did you just one day walk up to the girl you really like and start flirting and hope for the best? Of course not. You first found yourself a practice girl to both gain some experience and build confidence before going for the bigger win. We can take this same principle to get started with Theta Gang strategies. In this video, I will introduce you to the Theta Gang practice girls so you can start exercising your newfound strategies in a low-risk environment. Rest assured, many of us in Theta Gang have already run through these practice girls and can vouch that they're the ideal stocks to goof around with before working up to the big money items. Be our Eskimo brothers, and you too will feel confident selling short strangles on SPY. Our focus will be on low risk and low cost stocks, so even those with small accounts can play. Your goal should be getting used to your broker's interface, limiting your risk while building experience, and observing the good discipline to take profits early and reinvest your gains into shares. First up, we're going to rehearse the wheel strategy. This is where I'd estimate more than 80% of people get started with their Theta Gang trading. So if you are new to the gang and this is where you want to start, you're in good company. The wheel means bouncing back and forth between cash secured puts and covered calls to continuously receive premium. If you're not already familiar with the strategy, I'll link my tutorial video here. To get started with the wheel, I recommend Energy Transfer, ticker ET. This company controls 120,000 miles of oil and gas pipelines in the US, making them one of the biggest. Energy Transfer did some major financial restructuring in 2020 to take advantage of government relief during the pandemic, and now it's in its strongest financial position in well over a decade. As of March 2022, I own 243 units of ET across a few accounts, and I'm likely to add more. I use the term unit instead of share because ET is a master limited partnership, so it uses different terminology, although it trades just like a regular stock. Why is Energy Transfer a great practice girl for the wheel? Number one, the most important factor when you select a stock to wheel is to ask yourself, would I be happy to own this stock? In Energy Transfer's case, after its huge financial restructuring over the past 2 years, the answer is yes, so check that block up front. Number two, Energy Transfer is low cost, so portfolios with less than $1,000 can participate. And number three, ET is a dividend stock with a high yield over 7%. Normally, dividend yields are not something that we key on when we wheel. But as a practice girl, this is great. The dividend will allow you to see how the ex-dividend date affects options premiums, and how you can avoid early assignment on covered calls by keeping your strikes out of the money on ex-dividend date. And if you do get confused, don't worry. ET is a reliable stock, so you're very unlikely to get stuck in a bad spot even if you face early assignment. If I were to practice wheeling ET, I'd open the options chain and flip to 1 month to expiration. I'd be happy to buy ET at $9.50. So I'll sell the $9.50 put for $20. That will require $950 cash in your account, and for entering the contract, you'll receive $20 premium. That's enough for 2 shares. On expiration day, I'd be prepared to use that premium to buy shares regardless of where the stock is. If I get assigned 100 shares, I'd flip over and sell the $9.50 or $10 strike covered calls to collect more premium and continue wheeling. I'd also keep an eye on the ex-dividend dates, because dividends will affect both the stock and options prices. Get used to that on dividend stocks. All the while, keep that premium reinvested on every expiration day, and you'll have a steady flow of shares to build out your long-term portfolio. Next, we will rehearse the Strangle and Straddle. With these strategies, we sell a call and put at the same time, expecting the stock to stay within its historical price range. That way, we can benefit from Theta on both ends. I will release a video on strangles in the near future, but in the meantime, I recommend Tasty Trade and Mr. IV's tutorials, links below. Our practice girl for the short strangle and short straddle is the iShares Brazil ETF, which tracks Brazil's stock market index, ticker EWZ. Why EWZ? When we trade strangles and straddles, we need the stock to be somewhat volatile so that there is worthwhile premium, but we also want predictability. Indexed ETFs work very well at capturing a balance, and Brazil has one of the cheaper indexed ETFs at $34 per share. I used EWZ very successfully when I started practicing strangles, and I made enough money in premium to accumulate 100 shares of it over a few months. I've since liquidated them and bought VEU, another international ETF. If I were to strangle Brazil again, I'd open the options chain to as close to 45 days to expiration as I can get. 45 days to expiration is what Tasty Trade extensively backtested and found that it's the best balance of risk and reward. Since we don't have a 45 DTE right now, I'll get a 38 DTE. That ought to be close enough. I'd sell the 16 delta call and put. In this case, the 32 by $39 strikes. This will collect me $75 in premium, enough for 2 shares. However, backtesting indicates that the best practice is to take profits at 50%. So once I'm at a $36 gain and can buy a share, I'd close and buy myself an EWZ or another stock that I like. Managing this position while it's open requires some technique. Until I release my own video on strangling, I recommend Tasty Trade's tutorials. If I were to use a short straddle, I'd stay at 45 days to expiration and sell the $35 put by $36 call. Technically, this is a really tight strangle, not a straddle, but since there is no volume at all on the 35.50 strike, I'll just adjust the prices to round numbers nearby. This will mean collecting about $250 in premium, but backtesting indicates that the best practice on short straddles is to take profit at 25%, so I will close once I have about $70 profit and can buy 2 shares. Worst case scenario on either of these, EWZ goes back to its pre-COVID highs or deep COVID lows. In that case, you'd be out about $800. That would suck, but it's not very likely at all. Best practice, if EWZ moves too far against you, close for a loss when you're down 200%, or in this case $150 on the strangle or $500 on the straddle. You're going to take some L's when you trade, just know when to cut them. And for our last strategy today, let's explore the poor man's covered call, or PMCC. Lots of people want to wheel stocks like Apple, but they either can't or don't want to put down $17,000 to do it. As the name implies, the poor man's covered call offers an alternative way to do this. Instead of using 100 shares as collateral, we use leaps. I have videos on both leaps and PMCCs if you need a refresher, but buying leaps can still get pretty expensive. Before we spend $3,800 on an in-the-money Apple call, we need a practice girl. To practice our PMCCs, I introduce America's favorite auto manufacturer, Ford. As a practice girl for PMCCs, Ford offers us a low-cost stock with proportionately cheap leaps. You can start a PMCC on Ford for about $500. Further, Ford's valuation and financial metrics register as a strong buy according to Seeking Alpha's Quant AI, ranking number 1 in the auto industry. This means the stock is an excellent hold for a bullish strategy like the PMCC. If this looks like a tool you want, my Seeking Alpha affiliate link in the description will get you a lifetime discount to this service. If I were to open a PMCC on Ford, I'd open the options chain to September and buy the $13 call for an 80 delta. This will cost just over $420, a lucky number. Then I'd go to April 14th and sell the 1750 call at the 30 delta for $36. This 50 delta gap will give me good protection if the stock rockets, and the premium is enough to buy 2 shares. In a poor man's covered call, ideally you don't want to spend more than 75% the width of your strikes to open a position. In our Ford trade, we are spending about $387 to open a 450 wide spread, or 86%. This is less than ideal, but we have to make some sacrifices when trading low-cost stocks. Keep this target in mind when trading higher-end stocks later. Also, the ideal time to open a PMCC leaps is when volatility is low. As volatility rises back to normal levels, your leaps will increase in value as well. To determine when volatility is low, we use the metric Implied Volatility Rank, or IVR. I'm looking forward to the app Tendies rolling out its IVR metrics. In the meantime, you can find IVR on marketchameleon.com. You just have to dig around for it. Right now, Ford's IVR is a little high at 62%. It would be much better to get in when IVR is below 50. I would delay opening this trade until implied volatility cools off a little and hopefully get the leaps at a lower price. In a low IV environment, I might be able to save $40 to $50 on the leaps. That would help us with our 75% spending target too. Your goal when using Ford as a practice girl for PMCCs is to become proficient at setting up your position correctly. Aim for at least 40 delta gap between your leaps and your short call, and I prefer the 50 delta gap myself. Shoot for spending less than 75% the width of your strikes to enter, and open your position when IVR is low and you anticipate it going higher. Get into the habit of reinvesting gains into shares of something you like, perhaps Ford itself. If you can master these principles, then you will do well when you enter higher cost stocks and shoot for bigger money. I hope the practice girls I recommended give you a solid foundation to go after the bigger names. Rest assured, we've all gone through the same feelings when we just started trading. So if you're intimidated by taking that first step, Let these cheap and relatively low-risk stocks be your first taste. Comment below your favorite practice girls, and hopefully every new trader can find something they like. Thanks for watching, and I'll see you next time.